Welcome to The Explainer. You know, if you've ever had some savings to invest, you've probably hit this exact fork in the road. Do you try to play the market hunting for that next superstar stock? Or do you go a totally different route and buy a small piece of the entire market with something called an ETF? This is the fundamental choice every single investor has to make, so let's really break it down.
Okay, so here's how we're going to tackle this. First, we'll look at the dilemma itself. Then we'll dive into the excitement of picking stocks and contrast that with the hidden challenges. After that, we'll see how ETFs offer a pretty compelling solution. And stick around because at the end, we'll explore a strategy that might just give you the best of both worlds.
All right, let's get right into the heart of the problem. You know, every time you invest, you're making a bet with incomplete information. It's just a fact. You have no idea what the future holds, right? Which markets are going to boom, which companies are going to bust. And that deep uncertainty creates our first big choice. Do you speculate or do you automate?
So on one side, you've got what's called active speculation. This is the classic image of investing, right? You're doing the research, you're picking individual stocks, and you're hoping to absolutely crush the market average. And on the other side, you have passive investing. This is where you kind of automate the whole thing by buying an ETF, which is basically a pre-packaged bundle of tons of different stocks.
Okay, so knowing that choice exists, why are so many of us really drawn to picking our own stocks? The pull is undeniable. And honestly, there are some pretty good reasons why it's so appealing.
The appeal really boils down to a few key things. First and foremost, profit. The dream is that if you can just find the winners and ignore the losers, your gains could be huge, way bigger than the market average. It also lets you put your money where your values are, right? Investing in industries you genuinely believe will shape the future. And let's be honest, it's just more exciting. You're in the game. You're not just some passive investor, you're a shareholder who can actually vote in company meetings.
And that feeling of excitement, it's not just a hunch. It's a real psychological phenomenon called the IKEA effect. Seriously, think about it. You value that bookshelf you struggled to build yourself way more than a pre-assembled one. It's the same with your investments. A stock portfolio you built yourself just feels more valuable. The wins feel sweeter because you made them happen.
But, and this is a big but, that thrill of building it yourself comes with some very real, very tough challenges. The reality of trying to beat the market is a whole lot harder than it sounds, and it's so important to understand what you're really up against. So let's look at the cold, hard facts. To do it right, stock picking takes a massive amount of time and research. All that buying and selling racks up fees that can seriously eat into your returns. And here's the real kicker. Study after study shows that most professional money managers can't even beat a simple, boring market ETF in the long run. You're also taking on huge risk. If you bet big on one industry and it takes a hit, your whole portfolio can go down with it. But maybe the biggest challenge of all isn't even the market, it's you.
And this really gets to the root of the issue. The source material puts it perfectly. Our own minds are kind of wired to mess this up. Cognitive biases, things like being overconfident after a win or panic selling during a dip, cause us to make predictable and often very expensive mistakes. When it comes to our money, our own brain can be our own worst enemy.
So if picking individual stocks is that difficult, what's the answer? Well, this brings us to the big advantages of the other option we talked about, the exchange-traded fund, or ETF.
Just look at the difference here. It's pretty stark. Stock picking is a high-effort, high-risk, high-knowledge game. ETFs are basically the exact opposite. Low effort, low risk, and instantly diversified because you're buying hundreds, sometimes thousands of stocks at once. What you're doing is trading that tiny, tiny chance of astronomical market-beating returns for the much, much higher probability of steady growth that just matches the market over time.
And that leads to this crucial point. Given all those trade-offs, the source concludes that for most of us, most of the time, putting our money into a diversified, low-cost ETF is just a more sensible move. But the story doesn't have to end there.
What if it's not an either-or question? What if you didn't have to choose between being a cool passive investor and an active hands-on speculator? What if you could actually be both? Well, that brings us to this really clever hybrid model called the core satellite strategy.
The logic behind this is just simple and really powerful.
You don't have to go all in on one side of the debate. You can build your financial foundation on the proven stability and diversification of ETFs while still leaving a little room to play to satisfy that stock-picking itch with a smaller, more targeted part of your portfolio.
Here's exactly how it works. You put the vast majority of your money, let's say 80%, into your core. This is your rock. It's made of stable, broad market ETFs. That's your foundation for long-term wealth. Then, the other 20% becomes your satellite. This is your fun money, your space to experiment. This is where you can pick those individual stocks you believe in or bet on a specific industry, all without putting your main financial security at risk.
See, this approach gives you the best of both worlds. You get structure and discipline, but you also get freedom and excitement. It perfectly balances the sensible path with the speculative one. So the real question I want to leave you with is this. Now that you've got this framework in your head, what would your core satellite strategy look like? What would you put in your stable core, and what exciting ideas would you launch in your satellite?